and welcome to Tax Matters. I am Pearl Namaka.
And I am Chiamaka Ohauchi.
We want to begin this episode by setting the record straight. The other week, the media was awash with news of a supposed plan of the federal government to increase the rate of VAT to fund the budget, especially the concomitant increase arising from the passing by the Senate of 30,000 naira as minimum wage in Nigeria. Two major sources quoted were the Minister of Budget and National Planning, Senator Udo Udoma, and the Executive Chairman, Federal Inland Revenue Service, Mr. Babatunde Fowler.
The Corporate Communications and Servicon Department of the FRS has since come out with a rebuttal, of course setting the record straight with regard to what the Executive Chairman said at the meeting with members of the Finance Committee of the National Assembly.
In terms of facts, the service has increased VAT collections over the last 3 years by about 25%. In terms of whether they should get an increase, I believe they should get an increase, just that they shouldn't be currently in.
The operative word there is increase. And the question is, increase in what? Mr. Fowler was definitely talking about increase in collections, increase in tax collections, revenue.
I think that is what got some of the pressmen in attendance confused. Mr. Fowler couldn't have in one fell swoop advocated for increase in taxes across the board. And that was why at the end of that week, precisely on Friday 22nd of March 2019, we sought clarification from Mr. Fowler.
Now, during the week, the media was awash with news of a planned increase in the rate of VAT and other taxes. What really did you say at the National Assembly?
Well, what I said at the Senate meeting was that by the time we increase compliance, I personally believe that there should be an increase in the rate of VAT. And I gave an example of Ghana, where Nigerians visit frequently on holiday or on business and pay a higher rate of VAT. That's basically what I said. However, I believe that a time has come that those who have the ability, the disposable income, that they should pay appropriate VAT. VAT is for the benefit of all Nigerians, even the needy. 85% of VAT goes to the state government, who are in a more direct relationship with the citizens. And I think that Nigerians who travel abroad, who have been privileged to see what government provides in those other countries, should now step forward and stop playing politics and implying that VAT, a higher VAT, will impact the needy. You only pay VAT on what you consume. Items that are required, that are VAT exempt, like medicines, academic books, food and all that, and you don't pay any VAT on it. So I think we should address the issues, and if we are willing to pay 10, 15, 17% VAT in South Africa, in Ghana, in England, and other countries of the world, we should equally pay that at home.
We do hope that this helps to clarify issues. Maybe as a way of rounding up the matter, a few issues need to be highlighted. 1. The service collected 5.3 trillion naira in total taxes in the year 2018, made up of 1.1 trillion naira in VAT, 1.42 trillion naira in companies' income tax, 2.4 trillion naira in petroleum profit tax. 2. Perhaps as a way of fulfilling the proverbial reward for hard work being more hard work, the federal government has set a target of 8.8 trillion naira for the service in 2019. Finally, the rate of VAT in Nigeria is 5%. It has been so since its introduction in 1993, 26 years ago. That 5% is the lowest in the whole wide world. In the West African sub-region among our neighbors, Benin Republic is 18%, Ghana is 12.5%, Togo is 18%, Sierra Leone is 15%, Burkina Faso is 18%. Welcome back. The program is still Tax Matters. And talking about the 22nd of March 2019, a landmark event took place. The launching of the maiden edition of the Nigeria Tax Outlook 2019. Mr. Tayo Ogungbenro reviewed the Nigeria Tax Outlook 2019.
That we have the lowest tax to GDP ratio is no longer news. What is news is what do we need to do differently to salvage the situation. Let me just do a very small exercise. If you are 40 years and above and you attended a public primary and secondary school, please raise up your hand. To all those who that raise up their hand, say, I attended public primary and secondary school. If any of your children is in a public primary or secondary school today, signify. Ha. Can we believe that? I look at the crop of leaders in my office one day. All of us attended public primary, secondary, and even university. And not a single one of us asked any of our children in public school. A colleague of mine recently decided to relocate to Canada. The tax rate, for crying out loud, in Canada for the top earners is 60%. Do you want to move to Canada where you'll be paying so much tax? He said, Tayo, my children will go to good school there. I will work less. But I said, I thought you are earning good salary here. He said, yes, you are very correct. But I hand over the salary to the schools. Can you imagine how much we pay for education today? Where are we going as a nation? Or now we've abandoned what we used less than 10 years, 15 years ago. We need to do something. What we refuse to pay in form of proper tax is what we now hand over to providers of public services in form of schools, hospitals, and these things were available as recent as 20, 25 years ago. So what do we need to do? We need a complete overhaul of our tax laws. It should have been achieved like yesterday. For instance, today, 10% of our GDP is attributable to the telecoms and the IT sector. But this sector was practically non-existent when the last tax law were codified. Things have changed significantly. We need to learn also from other countries. I was shocked when United Kingdom decided to introduce special tax legislation just 2-3 months ago to address the digital economy. Said my traditional ways of subjecting companies to tax can no longer work. India said the definition of permanent establishment makes no sense again. Because permanent establishment concept is looking for a physical presence of somebody within your jurisdiction.
The occasion was graced by the presence of the Executive Chairman FIRS, who was the special guest of honor.
The developed world has clearly shown the way that the only way to ensure sustainable economic and social development is through taxation. Now, why is Africa as a continent where we are? And when we consider where we are, we still remain the poorest continent in the world. But we also can boast of having 65% of all the natural resources. And what simply happened was that in the 60s, when African countries were gaining independence, shortly thereafter, they started to discover natural minerals, all types of natural resources, and they thought that was the key to giving them independence, financial independence. And in the 70s, Nigeria, for example, had its oil boom. And for many years, decades, that was the source of our revenue. It accounted for well over 90% of our foreign exchange, and equally over 90% of all our earnings. Where are we now? The AU has what they call the 2063 agenda, which simply means that in the year 2063, Africa as a continent will no longer require aid. Africa as a continent will be able to source enough internally generated revenue through taxation to fund its oil programs. I believe it's safe to say that if we don't develop our own country, nobody else will do it for us.
Thereafter, a panel made up of representatives of leading tax advisory firms in Nigeria discussed salient issues concerning taxation of businesses in Nigeria.
Some of the incentives granted to the people in the manufacturing sector, in some cases, are counterproductive. For instance, if you look at the pioneer status incentive, which most manufacturing companies seek to explore, it's if you look at the section of CETA, we talked about the commencement rule. It provides that a company that exits pioneer status period would have to be seen to have just commenced business, such that commencement rule will apply. So if I have a 5-year holiday period where, I'm excited about the tax exempt from my profits, by the time I leave pioneer status period, which is 5 years and in some cases 3 years, I may be subjected to the commencement rule, which seeks to tax my profit twice. Now, this is not an FIR's issue, but it's a law issue that we need to revise the provisions of the CIT that talks about the commencement rule.
Hospitality industry is one of the areas where the revenue that the government is looking for could be generated. But the question is, how is that industry faring right now? There was a report that says in the next 5 years, the hospitality industry will contribute close to about 5.4% to the nation's GDP. Then what are the taxes that are in this industry? Majorly, you're looking at the consumption tax, which is under the jurisdiction of the State Internal Revenue Service. And you're looking at basically maybe VAT. Now, the major challenges that people have is why should there be duplication of taxes? Because they see it as such, that the consumption tax and VAT that are being charged, are basically the same thing. So as a result of this, they see it as multiplicity of taxes. From our own side, it is, we believe that the government needs to do a lot of sensitization in this regard to let them understand that the onus and the burden of that tax is not actually on the industry players, it's on the consumers.
The telecommunications sector has been able to assist other industries to bring products and services to our fingertips. So government should just encourage this sector to continue to expand so that they can still do more in the development of the economy. Now, quickly going to the issues affecting the telecommunications sector. So I would like to focus on the tax part. Number one is about claiming of input VAT by the telecommunication industry. How do we mean in this regard? You see, when companies incur expenses, they pay VAT. As expected that when they make sales, they should deduct the VAT they've suffered from the VAT they've collected when they make sales. In this case, the education sector, when they render services. But because the way our VAT Act is as of today, the services industries are disadvantaged. They cannot claim this input VAT directly from the output VAT they collect. So that leads to it has cash flow impact on this company. And it also affects their ability to invest further in this sector. Also is the issue of multiple taxes. It has been alleged that telecommunication companies pay up to like 38 different taxes to different tiers of government. Fine, some of these may be in the act, but some are not in the act. But these people, because they want to be in business, they have to pay this amount. And this is impacting on the performance of these companies. So, though we understand that the government forum is already looking into this, but the quicker, the better for these companies.
Mr. Fowler again took to the microphone to react to some of the issues thrown up.
People spoke about the commencement rule and 5 years of pioneer status. No investor to date has gone into any foreign country because of waivers or perceived benefits to their business. They go in with calculations knowing very well that it is profitable. The incentives may come later on. But so we should stop looking at businesses coming into Nigeria simply because we grant pioneer status. Someone also spoke about the hospitality sector in terms of us or government trying to promote it. We go back to the same issue. Without adequate security, without adequate infrastructure, you cannot build a hospitality sector. Government is the one that provides security, build the roads, provide the medical care in most cases, and then hospitality can ride on those benefits. But to do that, government also needs money. In terms of minimum tax was introduced because you find companies that have been in operations for 10 years, and every year they say they're making no profits. The question is, why are you still in business? The alternative of us waiving minimum tax is for us to now check with your bank, especially those who have taken loans, and see whether the records you give to your banker are the same records you give to us for tax purposes. Someone also spoke about the waivers of interest and penalty from VABES and whether we should continue in that line of waiving interest and penalty. A major problem of Nigeria is that we don't have any consequences, or there have been no consequences for non-payment of tax. The interest and penalty even charged right now is even lower than if you are paying interest on a bank loan. So some companies just say, I will not pay the tax. When they eventually find out, I'll pay the interest and penalty, which is cheaper than a bank loan. We cannot continue to operate that way and keep on waiving interest and penalty, because if we do that, we will be encouraging non-compliance.
High point of the occasion was the launching of the Nigeria Tax Outlook 2019 by Mr. Fowler, who was joined by the movers and shakers of the tax industry in attendance. What is the idea behind the Nigeria Tax Outlook 2019?
What this outlook is actually about is about the opinions of the tax experts, the tax professionals, on different industries of the economy. We actually cover about 8 sectors of the economy in this report, and what the tax expert basically do was to give their projection as to how taxes is going to affect business growth, and also their recommendations as to how the business community can, for lack of better word, navigate and have a proper tax planning that can also put them in a better position for the year 2019.
Kudos to Mrs. Aluko, and we recommend the Nigeria Tax Outlook 2019 to everyone. We go on a short break, and when we come back, we have guests in the house.
In 2018, a total of 5.320 trillion naira was collected as taxes by the Federal Inland Revenue Service (FIRS). This is the highest ever collected as federal taxes in Nigeria. Taxes have become an important source of revenue, enabling the government to provide greater infrastructural developments in our country. Tax revenues enable government to provide more roads, more railways, more bridges, more housing, more schools, more students in schools, more hospitals, more security, and generate more power. Because Nigeria deserves more. Only your taxes can make all our dreams come true. This message is from the Federal Inland Revenue Service, FIRS. It pays to pay your tax.
Hello and welcome to our guest corner. We have in the studio a gentleman and a lady. To the right is Mr. Kolawole Babarinde, Council Member CITN and Chairman of the 2019 Annual Tax Conference. To the left is Mrs. Afolake Osho, Assistant Director Corporate Services of the CITN and Secretary of the 2019 Annual Tax Conference. Gentlemen and lady, welcome to Tax Matters.
Thank you very much.
So to what do we owe this August visit in March?
Yeah, once again, thank you very much. The Institute
already planning for its 21st annual tax conference, and it's our practice to ensure that the awareness is shared worldwide as much as possible, and also to intimate our members and the society at large what is expected and what we have in stock for them concerning this program. This is the 21st edition, and it's coming up in April, precisely April 23rd to 26th of the year 2019. It's holding in Abuja at NAV Conference Center.
Wow, 21st. It has actually been going on that long?
Yeah.
It is customary to have a theme for the annual tax conference. Yeah. So what is the theme for this 21st annual tax conference?
This main theme is national development, unlocking the potentials of taxation. And we have carefully selected the paper presenters. One of such is Mr. Tony Lumelu, that is coming to deliver the lead paper. We equally have the country directors of the Big Four that will be coming to also participate in, taking some of these papers. We also have Mr. Babatunde Fowler, the chairman of Federal Inland Revenue Service, as well as the coordinating director, Mr. Abiodun Aina. We have the likes of Mr. DK, who is a retired coordinating director, a past president of the institute, and we also have some commissioners of Tax Appeal Tribunal, as well as Professor Tejusho Morin. So with all these people in attendance, we expect something more than the usual.
Now, Mrs. Osho, if I want to attend the 21st annual tax conference, what is required of me?
Well, for you to attend the conference, you must either be a member or non-member. Both members and non-members are expected to visit the website, www.citnevents.org. There we have the platform for registration as members, then platform for registration as non-members. You're expected to register as well as to make your payments. We have categories of payments available for members, their convenience. You can either pay online with your card, or you visit any commercial bank and ask for the Pay Direct platform. And you can also make direct payment at the bank.
So what does this cover, like the registration? What does it cover for the people who are going to be registering?
Okay. If you are registering as a member, you are expected to pay a token fee of 100,000. And if you are able to register between now and make payments between now and end of March, you get a 5% discount. And as a non-member, you have to pay 105,000 naira. But if you pay between now and the end of this month, you pay 100,000 naira. And it covers the conference materials as well as the 2-group lunch. Then you also be free to attend the gala night event, which is actually the climax of the conference.
Okay. So is accommodation inclusive in this amount?
No. The conference is non-residential.
Okay. So I just heard you mention gala night. So that means apart from the talk, that is the intellectual feast, what else do we look forward to?
Well, at the gala night, we'll be featuring musicians, DJs, and also we'll be treated to a cultural display by the National Open University Cultural Group, and a lot of things. Don't let me disclose everything.
Wow, can't wait. Yes. Can't wait. Thank you very much for coming on to Tax Matters.
Thank you very much, and we look forward to seeing you there.
Sure, we'll be there.
Definitely. It is on that note that we draw the curtains on this episode of Tax Matters. See you next week.
Bye for now.